All right, today we're jumping into the Q3 2025 earnings for Travel+Leisure, ticker TNL. The company dropped its numbers before the opening bell and, wow, the market's reaction was nothing short of explosive. So let's get into what's lighting a fire under this stock.
I mean, look at this. Right out of the gate, the stock just rockets up 15%. And the volume? About 3.5 times its daily average. You know, when you see a move that sharp, that decisive, it tells you Wall Street didn't just like these results, they absolutely loved them. So our job is to figure out exactly what catalysts are behind this massive rally.
So here's how we're going to break it down. First, we'll hit the headlines, what turned out to be a classic beat-and-raise quarter. Then we'll peek behind the curtain at the key performance indicators. Third, we'll dig into the strategic story that management is telling. And finally, we'll put it all together for a look forward with a prediction for the next call.
Okay, let's dive right into part one, the headline financials. This is the stuff that really set the tone for the entire day.
And really, it was just a clean sweep across the board. Adjusted earnings per share, basically the company's profit per share, came in at $1.80, nicely beating the consensus of $1.73. Revenue cracked over $1 billion, just squeaking past expectations. And adjusted EBITDA, a key measure of profitability, landed at $266 million, a full $11 million ahead of what analysts were looking for. This wasn't just a small beat, you guys. This was a really decisive outperformance.
And you know, management's tone on the call, it matched these numbers perfectly. CEO Michael Brown came right out and called it an exceptional quarter, and he kept hitting on words like strength and consistent execution. That's exactly the kind of confidence investors want to hear from the person in charge.
So that brings us to part two. Let's go behind the numbers. To really get what's going on here, we have to look at the key operational metrics, the stuff that actually fueled those big headline beats.
And this one stat just illustrates the story so well. 18 straight quarters with a VPG over $3,000. Think about that. This isn't a one-off success. We're talking about a 4.5-year trend of just incredible sales efficiency and pricing power. And for this quarter, VPG actually hit $3,304. That's a 10% jump from last year. Just fantastic.
Now, for anyone new to this industry, volume per guest, or VPG, is an absolutely critical metric. It's simple. It tells you how much sales revenue you're generating from every potential customer who takes a tour. So a consistently high and rising VPG like the one TNL has, that's a direct signal that consumer demand is strong and your sales team is executing flawlessly.
So where did all that money actually come from? Well, the vacation ownership business was the clear engine here, bringing in $876 million, up a healthy 6% year over year. The travel and membership side was more or less flat. So what does this tell us? It tells us the core timeshare business isn't just healthy, it's actually accelerating. Okay, on to part three, the strategic storyline. This is where we connect the dots, right? We're going to link the numbers we just saw to management's long-term plan. How are they setting this company up for future growth? Well, the central theme that kept coming up is this deliberate strategy to expand their addressable market. What that means is they're not just leaning on their old legacy brands anymore. No, they're actively building out this multi-brand platform to pull in new and much more diverse kinds of travelers. And you can see this strategy in action right here with their recent launches. You've got Sports Illustrated Resorts, which is targeting sports-themed getaways in places like college towns. Then there's the new Bauer Adventure Club, which is perfect for that outdoor-focused traveler, and a core vacation club, which helps them expand their reach internationally. See? Each brand is designed to pull in a totally different type of customer. It's smart. Now, behind the scenes, they're running a very, very savvy capital strategy. The best way to think about it is like a flywheel. First, they issue new debt at better rates. Then they use that to back these big securitizations. That's where they package up their timeshare loans and sell them to investors. That, in turn, gives them the low-cost capital they need to fund new sales. And that generates the strong, predictable cash flow that they then return to shareholders. It's a really disciplined, self-reinforcing cycle. And they are absolutely returning that cash. In Q3 alone, they sent $106 million back to shareholders. $70 million of that was spent buying back their own stock, and another $36 million was paid out in dividends. This is a huge signal of confidence from management about the future. So, this all brings us to our final section, the next call, a prediction. Let's put all these pieces together and see what it tells us about the future. After a quarter this strong and a stock reaction this big, the natural question every investor is asking is, what's next? What's the trade from here? Is there still upside?
For me, the single biggest catalyst is right here, the raised guidance. Management didn't just meet expectations, they boosted their full-year forecast for adjusted EBITDA to a new midpoint of $975 million. By raising the outlook, they're sending a clear signal to the market that the strength we saw in Q3 isn't a fluke. They believe it's sustainable. This is the raise in beat and raise, and it's what forces all those Wall Street analysts to go back and revise their models higher.
So, if you're trying to sum it all up, the bull case is just crystal clear and really compelling. You've got raised guidance signaling confidence, you have sustained VPG strength that shows real pricing power, you've got this new multi-brand strategy that's acting as a growth engine, and you have a disciplined commitment to returning cash to shareholders. I mean, all the pistons are firing right now.
So, based on this exceptional execution, the clear strategic momentum they've got, and that all-important upward revision to guidance, our rating on Travel+Leisure is outperform. The company is just demonstrating a powerful combination of operational excellence and smart capital allocation, and we think that justifies a bullish stance moving forward.
And to close, just a quick reminder for everyone. This analysis is for informational purposes only. This is not financial advice.